Is the crypto bull market over? Or have we actually not even started the crazy altcoin season of 2025-2026? This is not talking about the idea that the bull market hasn't even started. Obviously, that started all the way back in November of 2022. But there's this idea that we run with 4-year cycles. 3 years of up, 1 year of down that was supposed to end somewhere throughout middle 2025, beginning 2026. What if I were to tell you that because of institutions and because of recent developments, perhaps we've now strayed away from this 4-year cycle and the craziest of prices is still yet to be seen? Ladies and gentlemen, make sure you go ahead and press the like button on this video. If we get to 500 likes on this video today, I'll give away $100 to somebody in the comment section. This theory, however, has been obviously talked about by many. But one of the most prominent Twitter characters in the crypto space, TechDev, he had an interesting opinion on the matter. He said, many think the cycle has topped. Some think that it happened months ago. But what if we're barely halfway, with the parabolic phase yet to begin? This cycle's uniquely glacial pace is confounding many. Time can shake as many loose as volatility, if not more. And he actually does present quite an interesting chart that showcases a top with, again, indicated by, let's just call it, inclining red candles right here, or red bars, indicated afterwards with a green phase, or in this case here, a halfway point right there. Continued on. You can just see it from looking at it, right? I don't have to explain it to you too much, the idea of what it looks like. Anyway, let me just give you the rundown here. Following this business cycle, it basically showcases that what we thought would be a 4-year cycle may actually turn out to be perhaps like a 6-year cycle or something along those lines. And when you start breaking it down, the idea that Bitcoin, or the cryptocurrency market, goes 3 years of up, 1 year of down, obviously does not have as much relevance anymore, as it goes from just a retail-oriented, let's call it ape fest, to a proper, let's call it, institutionally invested scheme with a freaking president, many countries having it as sovereign wealth funds invested in it, etc., etc. Like, this is bound to change at some point. And perhaps following this chart or following this piece of logic, our scopes are just too narrow. And we are forgetting that just because it had a major crash every single time after 3 years, that this time around, it could actually take a significant amount longer and not, again, go for the 80% crashes it's had before, but also, by that logic, perhaps not have an altcoin season as severe as previous times, have a way slower run-up and a way lower, I'm going to call it, peak. So for example, previous times, every single time, it was a 3x from the previous top, right? Maybe this time around, it's going to follow the stock market or major indices more closely, and in turn also have less gains per year, but then again, also less decline the moment that the bear market does hit, or this bearish period does hit. Now, before I move on, I will quickly state, if you're looking for a crypto exchange to trade on, here's an exchange you can use from anywhere in the world. You might need to use a VPN, but regardless, it's Blofin, the exchange I talk about every single day on the channel. And right now, they've got something pretty special. You can see right here, they're giving you a $300 position for new users. All you got to do is just put your phone number in or your email, just confirm that. Again, no need for your ID or things of that sort. And the idea is just get yourself an account, confirm that you're a real human with your phone or whatever, right? And then you get yourself a $15 free at 20x leverage. So a $300 position to you. And once you're inside of your account, you have to go to this little thing called the Rewards Hub and then the Coupon Center. And then it basically looks a little bit like this. You just choose the different coin you'd like to open a position for, and you open it like this. Pretty nice and absolutely, absolutely free, which a lot of people like to see. Anyway, link for that is down below. Having said that, there was a lot of fear recently over MicroStrategy, the biggest Bitcoin holding company out there, which is apparently not fully a holding company, but a company that's also got a treasury in Bitcoin, regardless of them going bust. And this igniting the massive crash of 2025-2026 that brings us back to 50 or even 20 or even $1,000 or even $0 a BTC. Let me tell you two parts. One, critical point for Michael Saylor's strategy, right? Well, we'll cover the other side in just a second. MicroStrategy has only reached those oversold levels, like we're seeing right now, 3 times since adopting its Bitcoin strategy. During the COVID crash, after the 2022 bear market bottom, and now. At the same time, the stock is testing a major long-term support level, making this one of the most important technical zones of the entire cycle. This is a pivotal moment for MicroStrategy, but he himself sees that quite differently. First of all, man, a lot of companies out there are still just buying more and more Bitcoin. They're not worried. But if we quickly go back to Michael Saylor or MicroStrategy's comments, here we go. If Bitcoin drops to their $74,000 average cost basis, what people are worried about, what would happen? Well, they still have 5.9 times assets to convertible debt, which we refer to as the BTC rating of our debt. At $25,000 a BTC per Bitcoin, it would still actually be a 2.0x, meaning in reality, even if Bitcoin were to go to $25,000 a coin, they'd still not be in that bad of a position. Sure, they'd be down a significant amount of money, especially on their investments, but would they get completely wrecked? Well, not necessarily so. People have been talking about them being forced to sell, but in reality, they're not forced to for probably a very long time, and only if the outlook going forward is also very, very bad, or if they've overstepped their risk boundary. But by the idea, they've been able to raise money at these levels, they've been continuing on for all these years, even through very bad times, makes me believe the probability of them having to sell, or people buying into MicroStrategy with the idea of this being a final solution, I think is quite small. And I personally believe as well, as long as the major indices, as long as Google and other stocks here continue on forward, I don't think necessarily the odds of us going to zero here are that high, because Bitcoin and most of the cryptos just seem to be following along the stock market here recently. And 𝗕𝗃 later said, this is historic. Alphabet has accounted for 20% of the S&P 500's year-to-date gains, the most among any stock. This comes as the company has added $1.3 trillion in market cap this year, with NVIDIA being the second largest at $1.05 trillion, or 16%. This is followed by Broadcom, AVGO, and Microsoft, which delivered $520 billion and $380 billion, respectively. And as a result, the top 10 stocks have accounted for 60% of the S&P 500's year-to-date gain. In other words, the remaining 490 stocks have accounted for just 40.6% of the S&P 500's rally. Big tech is still all that matters. And thus far, as big tech moves up, our other big tech piece, Bitcoin, cryptocurrencies, have also been following along quite nicely. And so right now, it seems we're not really talking about the S&P 500, we're talking about the S&P 7. Anyway, talking about those stocks today, yet again, we had ourselves a pretty positive opening. And right now, the S&P really is quite close back to all-time highs. From a pretty interesting bottom, you can see here about 6,500 or so for the S&P bottom just a few days ago, similarly to where Bitcoin bottomed out around the same dates, right? Right now, moving itself back upwards, back to all-time highs, and it barks the question, is this also, if the S&P were to break all-time highs, where Bitcoin is able to continue the uptrend? I mean, right here for NASDAQ, we have to wait a little bit of time because the data is delayed, but in a few minutes we'll get that. Anyway, what can we derive from this data? What can we derive from all this? As NASDAQ, by the way, also opened up bullish like crazy. What can we derive from all this? Well, in my opinion, that there's a pretty high probability that the next big crash for crypto, and I'm not talking about a 30, 40%, I'm talking about 80 to 90%, could have either already been well on its way here, as we're already 30 to 40% down, with the result of that being, well, I'm basically already set for my buys. I've already got all the areas where I'll be buying, and I've explained them in videos before. Starting at 83,000 all the way up, or all the way down to about, well, you can see right here, right? Starting basically at $83,000 all the way down to about 55, with varying different points where I really buy a lot. For example, 78,000, 71,000, and then primarily, if we kind of skip this previous bottom here, at roughly, matter of fact, now that time has passed, it's already coinciding with that. Roughly the last line of defense being around $54,000 or so at BTC, where I'll be buying. The only one that I kind of skipped over or glanced over is the previous top in 2021. But that again is very close to the $71,000 level, roughly $69,000. In the middle here, I'm not really too excited to buy anything because it's like catching a falling knife most likely. But since that line of defense is set, and I don't think we can ever go below 55,000. If, in the worst case scenario, we were to crash in the bear market, I don't think it's going to be an 80% crash like before. I think basically 60% is worst case. Well, from that angle, we've already done the majority of the damage. The damage afterwards is going to be significantly less painful. It will be painful, but less. However, I personally think that bear markets usually start not because of one mass liquidation event with low liquidity afterwards and massive manipulation. I think it starts because of some, let's call it, craziness. And in the crypto market, I'm going to call it DATs, these digital asset treasuries, going absolutely nuts, or rather, because all of a sudden, your Uber driver has pre-ordered a new Lamborghini or some stupid things like that. Everybody's making too much money. The dumbest friend you have all of a sudden made crazy amounts of money with crypto. Those are periods where the market suddenly turns back around. And sure, these are now bearish periods that follow after bullish periods, but I don't think this is where the market is going to go for the next year or so. Matter of fact, I think since stocks had a really, really bad time because of the AI bubble, it caused Bitcoin to fall as well, specifically in terms of a manipulated effort because of what we saw last month, the 10th of the 10th, the mass liquidation event. It prevented liquidity from coming back in, allowing this to happen. But right now, the market is finding its basis and slowly but surely building itself back up. This is my own personal belief. And as long as the stock market doesn't go for a crazy crash, right now we're basically going sideways, but as long as the market doesn't go for a crazy crash, it seems like Bitcoin is also quoted for slightly more upside. Then again, I will warn you now, the stock market has been going up for a few days in a row. Bitcoin has basically been going sideways for a few days in a row. Do with that information as you please, but it's not necessarily a one-to-one. And the first day now that the stock market has a massive slash, or it refuses to break the all-time high, it could get reflected back into coins. And if it doesn't, then I'll showcase to you that the correlation that we often dub here, we often talk about, may not be as strong, which is actually quite nice for our crypto coins. Because we're all waiting for the 10th of December, right? We're all waiting for the interest rate decision that is most likely going to be in our favor. But again, if the cryptocurrencies follow the stocks more closely, there are actually quite a lot of events you should be more careful for because, well, if we're back at almost all-time highs, if we don't break them and we actually fall from here for at least a while, we get some sort of slash in stocks, not even crypto, that could affect us hard. Whereas right now, almost all the negative factor for crypto alone have been evaporated. It's just mostly the fear of stocks. And if all the fears for crypto are gone, it's just stocks, well, you know, if stocks then do well, sure, we face some good consequences. You get the drift, right? Right now, all the major fear points for crypto are gone. We should have found a good basis to start building from here. It's only stocks that could make us kind of sketchy. But if now that correlation also fades because the crypto market's not moving as much up, even though stocks are, that could be good. You may not understand it just quite yet, but it could be good. Regardless, I'm very much excited for the possibility that the cyclical nature of 4 years is changing over, specifically because institutional money might be adding to this. And all I'll say is, thus far throughout crypto, all you've had to do is just buy and shut up and be a freaking bull. And I kind of think that's not changing anytime soon, so that's exactly what I'm doing. Just buying, shutting my ass up, and realizing that most likely over the next few months or years, I'll thank myself, and that's about it.